right, well, we're going to go ahead and get started. My name is Debbie Johnson, and I am with the Johns Hopkins Federal Credit Union. And this is I believe, our third webinar for home buying virtually. So we're excited that we're able to offer that for you guys. I think it's a lot more convenient to be able to attend a webinar or seminar via your office. But we have a wonderful, wonderful group of panelists today. And we're just going to be talking about home buying in general, and then also live near your work. So there's a lot of great information that we're going to be discussing today. And then some housekeeping. We are going to have the Q&A open. I know some of you already submitted Q&A questions that I believed were addressed. But I'm going to be also giving you information on our panelists and where you can contact them. So I would ask that the real, involved questions or personal questions, if we're not able to directly answer them today, if you can email our panelists, that would probably be the best bet for you to get your question answered in a timely manner. Also, we are recording this webinar, and that's going to be sent out in an email probably tomorrow. And then we'll also have the slides as well. So everyone is muted, of course, and everyone's video is off. So don't be alarmed if you think your video is on, your video is not. I think that's pretty much it. And with that, I'm going to introduce our expert speaker today. We have Betty Freard. She has been with the credit union for a while, and then is an expert at all things real estate lending wise for the credit union. And we're very, very thankful for her expertise. And I know some of you might have already spoken to Betty and her wonderful team. And then we also have Jeremy Hornberger from the Work Life Programs. She works for GHU Benefits and Work Life, and she's going to be discussing the Live Near Your Work program for those Hopkins employees that are able to take advantage of that. And then Demetria Scott, she has worked with us for a long time. She is awesome. So she'll be able to answer your questions as far as the housing market. And I know we're going to be going over some of that today. It's a very interesting market. And then also we have our little QR code as well that feel free to hover over that, and that will send you directly to her information to speak with her at a later time. And with that being said, I'm going to go ahead and hand it over to Betty.
Thank you all for signing on this morning and joining us for a little bit of talk about home ownership and the steps that you need to take. This is very much designed for folks who don't know a lot about the process. Hopefully we'll be able to address a lot of your questions in this session, but as Debbie said, feel free to email us either during the session or after the fact, and we can set up time to talk to you or what have you if you have something that's a little bit more involved. Okay, so if you're thinking about buying a home, where you really want to start is to talk to a loan officer, okay? And that's particularly important now because it's such a competitive market. You're not really even going to be able to go see homes and make offers on homes until you've spoken to a loan officer and gone through the pre-qualification process. It's a good idea in any case so that you don't go out there and fall in love with $1 million property and then find out after the fact that your budget is $250,000. So, it really does give you a lot of good information up front, and it doesn't take very long, okay? So, it's just very helpful to do. All right, Debbie, can you advance for me? All right, so pre-qualifying for your mortgage. So let's talk about this process. Okay, as I said, it's pretty fast and it strengthens your negotiating position because someone has told you that you can afford to buy a house for X amount of money and have X amount of mortgage. Okay, but what's involved in this process? What am I as a lender looking for? Okay. And have this thing called the 3 C's of credit, which has been around for many, many, many years, but it's a good way of looking at it. Okay, so when you're qualifying to buy a house, one of the first things your lender is going to look at is the collateral. In other words, what kind of house are you thinking of buying? What kind of shape is that house going to be in? How much of a down payment can you make? All right, if you're in the market to buy just a regular home that someone else has lived in and you think it's going to be in pretty good shape and you don't expect there to be any major repairs, that opens up a much wider range of loan options for you than if you think, oh, I want to buy a house that's really a fixer-upper and I expect to have to put a substantial amount of money into the home and I'm looking for a loan that will give me the money to rehab it. That's a different type of specialized loan program. So you really want to explore that with your lender in terms of what you're thinking of buying. Are you going to buy a 1-unit property? Are you looking for a 2-unit property where you could rent one? The lending rules are different for all of these. So try to pin down, before you even talk to a loan officer, what are you thinking of in terms of that home? Okay. Now, along with the type of home you're buying, the collateral section includes how much of a down payment you're going to make. All right. There's sort of a perception among many people that you need to have a 20% down payment to buy a home, and that is not true. Okay. There are a lot of loan programs out there where the down payment ranges anywhere from 3 to 5% as a minimum. Okay, so it's less than you would think. But in addition to the down payment, you do need to come up with funds for closing costs. And unfortunately, Maryland is one of the states that's a little expensive on the closing cost side because there's a lot of government charges. All right, so depending on the purchase price range that you're in, your closing costs might be anywhere from 3 to 5% of the purchase price. And when you do that pre-qualification meeting with the loan officer, they'll help you pin that down, what you can expect to need in terms of funds for down payment and closing costs. Those funds can come from your own savings. They can come from gifts from family members. They can come from loans against retirement plans, and they can come from grant money, okay, such as the Live Near Your Work grant. And usually with grants, if you're getting a grant, you can actually apply for multiple grants if they're available in the area you're buying and in your income range, and sort of stack them up to help yourself. You're not necessarily limited to just one. So again, your loan officer can help you explore what might be available to you. Okay. The next thing that we're going to look at is your capacity to make the payment. Okay. If you've ever heard a lender talk about debt ratios, this is what we're talking about. All right. If your before tax income compared to your monthly expenses, including the anticipated new first mortgage, if your income doesn't really support those, we're not going to be able to make the loan. So this is a critical part of the pre-qualification process. We're going to look at your before tax income, okay, not your net income. And then we're going to take all of your monthly debt payments, including the proposed new mortgage, including taxes and insurance on that property. And we're going to compare that to your monthly income. Normally, most lenders are going to be comfortable with the total of your monthly debts being around 43% or so of your before tax monthly income. Some lenders will go higher. Some lenders would prefer to be a little bit lower. What I always say at this point, though, is just because I tell you you can afford a certain mortgage payment, that doesn't necessarily mean that you're going to be comfortable with it. Okay, so make sure that when you're talking to your loan officer about what you can afford, get them to give you an idea of what that monthly payment would look like and consider that in your own budget. You know, we never want somebody to buy up to the maximum that they can possibly afford and then not be able to furnish the home and have to run all the credit cards up. So just make sure that it's a figure that you are comfortable with. Okay. The next thing we're going to look at is what we call character. And what this means to a lender is the probability that you're going to pay us back. Okay. And of course, we've not known you personally for a long time or any of those good things that could indicate character. So what we're going to be looking at here is primarily your credit, okay, and your past history of making payments on your loans. For a conventional mortgage, which is the kind of loan that we do, you need a credit score of at least 620 to get a mortgage. The higher the credit score, the better in terms of probability that your loan will be approved and also the interest rate we can give you, okay? There are other loan programs out there such as FHA where lenders may go below that 620 credit score, okay? And I would say if your credit score is 650 or lower, you really want to compare FHA to conventional and see which one of those is going to give you a better deal. All right. The other factor that we look at in terms of character is job stability. If I have a borrower who's applying for a mortgage and they've been on their current job for a month, and prior to that they were unemployed for 2 months, and then they had a job for 3 months and they were unemployed for a couple of months, I don't have a way of knowing if the income I'm using to qualify them is going to continue because they don't seem to be able to hold on to a job, okay? This doesn't mean that you can't have changed jobs, all right? Many people change jobs. Sometimes they change jobs in the middle of the mortgage process, and that's fine. What someone approving your mortgage loan is going to look at is, does it look like this person is going to be employed sort of in the same role, in the same income level in the future? What's the probability of that? Okay. So if we can see that, if you've changed jobs, but you've advanced in your career or just moved to a better place, something like that, that's absolutely fine. Likewise, if you've been enrolled in school and then go to work, fine. Obviously, school is going to advance your earning capability, and so that's perfectly acceptable. All right, Debbie, you want to advance me? Okay. So I mentioned briefly a couple of different mortgage options when I talked about conventional or FHA. What the credit union offers is a conventional program with either 5% down or 3% down. We have a 3% down program called Home Ready. And the Home Ready program has some income limitations. You need to make less than it's 84,000 and change, okay? But if you do, and you do some homeownership counseling, we can put you in a 3% down payment program. And there's also some pricing advantages to that too, which I won't really get into at this point. But if you think you're a candidate for that, I'm happy to explore that with you. Another thing we offer is what we call our 80-10-10 program. Anytime you have less than a 20% down payment on a mortgage, you have to pay for something called private mortgage insurance, which pays the lender if you unfortunately default on the loan and there's a balance left after the home is sold. Okay, it doesn't do a thing for you, so a lot of people like to try to avoid it. So if you can put at least 10% down, we can give you an 80% first mortgage, avoiding the mortgage insurance, and then we can give you a home equity loan for that remaining 10%, so that all of the payments you're making are going to build equity in the home rather than to pay the mortgage insurer. Okay. We also offer a grant program in conjunction with the Federal Home Loan Bank of Atlanta, okay, that offers two different grants, the Community Partners and First Time Home Buyers grants, which I believe are on the next slide, Debbie. There we are. Nope, there we go. All right, I'm not going to go into this in a great deal of detail because the funding for this program is less than it was last year. I'd say if you buy a home in the very near future, in 2022, check in with me to see if these funds are still available. I'd expect them probably to be gone in the next month to 2 months, just based on how much funds they have. Okay, so you can get either $10,000 in home buying assistance for employees of hospitals and educational institutions, many of our members, or if you're a first-time home buyer, you can instead get $7,500. Okay, there are income restrictions based on your total household income, as you can see here. All right, and this is not people who are going to be on the mortgage. This is anybody living in your house. So for example, if you're a single parent with young children, you know, and those kids are not working, you'd look at that 4-person household, and that's where you would fit, you know. You do have to do home ownership counseling, and they put a lien on your home for 5 years. But then after that time period, it's 100% forgiven. And you're able to sell the home, refinance the home, do whatever you'd like with the home without any restrictions. So funding for this program renews every year. So if you're one of the folks who are just sort of attending this webinar so that you can get a feel for your next step, and maybe it's going to be next year that you buy a home, keep this in mind. Or as I say, if you think you are very close to putting in a contract on a home, this might be appropriate for you. By the time we get to, you know, June or July, I'd anticipate the funds will be gone for this year. All right, Debbie, you want to advance? All right. I did want to mention one thing about our program. And whether you go with the credit union or with another lender, this is something you want to think about. People become very focused on what is the rate and what are the closing costs. You also need to think about how easy is it going to be to deal with these people once I have a mortgage. Okay, so we pride ourselves on giving good service, both throughout the process and after you buy the house. We service our loans here at the credit union so that when you have a question, you can come in, you can give me a call, I can walk down the hall to our servicing area, or I can walk down the hall and pull up your loan and take a look at it. You're not calling somebody you don't know in a different time zone. Sometimes that works out fine, you know. I had mortgages with many different companies over the years, but sometimes when you need help, you get a very impersonal approach. So just keep that in mind. You know, if you're looking at a lender, look at them online and see what their ratings are in terms of servicing the loan. You know, see if they sell their servicing. Try to get an idea of who it might be sold to if you could, so that you can look them up, and just really consider that, because you're going to be working with these folks over a number of years. All right, Jeb? Okay, just a couple of things to both help your loan officer and help yourself when you're looking to buy a home. Make all your monthly payments, okay? A lot of lenders will pull credit up front and then they'll pull it again right before closing. So keep everything real clean. Your loan officer or loan processor is going to be checking in with you a fair amount. So make sure you check your emails and your voicemail messages at least once a day, just to make sure that there's not something out there that requires your urgent attention. Keep putting money in savings, okay? Even if you think you have plenty, keep putting that money away, because even if you don't need it, after closing, you may find that, oh, there's this repair item I didn't anticipate. You have a little bit more money to spend on furnishings, okay? Don't change jobs without telling us. We're going to verify your employment right before settlement, Okay, so then if you've changed jobs and we don't know, we're taking a step backwards. We're asking you for documentation. We have to figure out, do you still qualify? So if you're going to change jobs, if you're going to retire, anything like that, just let us know as soon as you know, because if we can plan for it, we can make it a very smooth process. Okay, try not to open new accounts. Don't make a major purchase. Don't co-sign for anyone. If your car breaks down and you have to get a new one, just let us know before you sign the loan paperwork so we can make sure that you can still afford the house with that loan. Okay. Don't make large deposits that can't be sourced. When you submit your loan application, lenders are going to ask you for 2 months bank and credit union statements to show your source of funds for closing. And they're going to ask you to document large deposits. And by large deposits, they mean more than 50% of your monthly income. So if you're the person who likes to move money around from bank to bank to bank to bank, try to hold off for a 2-month period, because we're going to ask you about every big deposit, and then you're going to have to give us those bank statements. And if there's a big deposit on those, we're going to ask for the other bank statements, and we will drive you crazy. All right. So keep it simple for that period of time when you're buying a house, to cut down on the number of requests that you're getting in terms of documentation. Okay. I had a couple once who their down payment money came from selling a mobile home, which they sold in the middle of a field in Delaware, and they didn't keep any of the paperwork. And because they didn't keep any of the paperwork and I had nothing to go by, we couldn't use that money for closing, and they didn't have enough. Okay. So just be real careful with your money there. All right. Disputing accounts. It's not a problem if you dispute a couple of accounts, but sometimes folks will talk to a credit counselor who says, oh, we'll dispute all of those and your score will go up. Well, if you dispute too many accounts, your credit report becomes unusable for me. So watch what you do there. Okay. Any inquiries on your credit report, we're going to ask for an explanation. And of course, everybody shops around for a mortgage, and you're going to have inquiries for that. That's fine. But going back to opening the new accounts, if you have multiple inquiries that looks like you're really shopping for credit, it's going to make the underwriter who's approving your loan wonder what they don't know about the transaction. So if you can try to hold off on that type of thing, you know, shopping for credit cards, et cetera, until after you go to settlement, that's going to be in your best interest. Okay, Deb. All right, I'm going to turn this over to Jeremy at this point. She can talk about Live Near Your Work.
Great. Thanks, Betty. Thanks, Debbie. I am Jeremy Hornberger. I am a work-life program specialist at Johns Hopkins University. I'm in the Office of Benefits and Work Life. The Live Near Your Work program does serve both the university and the health system employees. And so I'm going to go over just the basics of the program with you all today. And my contact information will be provided on the last screen. So if anyone has any individual questions about a specific situation, please feel free to email me. So the way I'm going to do this today is actually to walk you through our website, because it has all of the information you could possibly need, including the interactive map where you can look at the boundaries and what grants are available. So if you already have a home in mind, you might be able to see if it falls within the boundaries and what grants are available to you. So I'm going to go ahead and share my screen. Okay. All right. Can everyone see the Live Near Your Work website? Oops. There we go. Okay, we're good now. Okay, so here is where you're going to find all of the information you could possibly need regarding our program, including the eligibility requirements, the steps needed to apply, as well as additional resources for other incentives that might be available to you. So we've kind of consolidated the information to those who have been to our site before. So it's all on one page now, and you will not have to go to multiple pages to find all the information you need. So firstly, we're just going to go down here to about the program. As Betty mentioned, for most grants and incentive programs, the home buying course and one-on-one counseling session has to be completed prior to making an offer on a home. And that certificate that you receive from the counseling agency is valid for 1 year. So even if you have purchased a home in the past and it was years ago, you are going to need to complete that counseling course and session again and provide an updated certificate. Otherwise, you will not be eligible for the program. The Hopkins grants are a taxable benefit as determined by the IRS, and they will I'll go over the grant amounts and how the taxes affect the take-home amount that you would receive, but they are distributed from Hopkins as part of your direct deposit payroll. The city live near your work portion, the $2,500, which again, we'll go over all of that, is not taxable income. And so that's an actual check that your lender will have to pick up from the city. So it does take a little bit longer, which is why we recommend that those interested in applying for the grant apply at least 30 days prior to your projected settlement date. And then just down here, we have a pretty cool graphic of just how many people have purchased homes through the program in the Baltimore area. You can see the largest amount being down here near our East Baltimore campuses. And then the second being up here green, and that star indicates where the Homewood campus is. And this is from, my goodness, I think it's current through November of last year. So pretty cool representation. So let's get into eligibility really quickly. And again, you can come back and visit the website at any time. So these grants are open to full-time benefits eligible employees of the university, hospital, Bayview, community physicians, health system, and healthcare. There's no probationary period to apply for a Live Near Your Work grant. You just have to be an active employee on payroll. We do have a lot of people who are moved to Baltimore to take a job at Hopkins. And unfortunately, you cannot use the grant program until you have started your position at Hopkins. Grants can't be used retroactively. So I just like to put that out there because that's one of the questions we get a lot, because it is a nice recruitment tool, but we can't issue a grant prior to you being on payroll. And then just down here, this is an employee program. So students are not eligible, part-time employees are not eligible. You have to be eligible for full-time benefits in order to take advantage of this grant program. And then, like I said, the homeownership course and counseling are a requirement as well. And I'll show you the site where we have a list of all the approved agencies. And another silver lining of COVID is that most of them are offering a virtual option at this time. So you can kind of take it whenever, and it meets your schedule and needs. And I've had a few applicants who have had to repeat the counseling process, and they were able to do it within a day or two, which doesn't delay the home buying process, which is kind of nice. And this is a Hopkins and a city requirement. So the city will also ask for proof of completion of the counseling and course. And then the third major requirement is within a designated neighborhood. And so here's a map, and I'm going to go into this map in a little more detail shortly, but you can just kind of see the general areas there that are covered under the grant. The blue purpley shaded areas are our campuses. So we've got Homewood up here, Eastern, East Baltimore, and Bayview. And then these green areas are the highest grant amounts. That's going to be the 17,000 grant amount total, which would be 14,500 taxed from Hopkins, and then the 2,500 from the city. For university employees, if you were to purchase within one of these orangey yellow areas, it would be a $10,000 total grant. And then all other areas are 5,000, 2,500 taxed from Hopkins, and then 2,500 from Baltimore City. There's a few other rules and requirements of the program. The grant can only be used towards down payment and closing costs. Only one grant per eligible address. So even if you're both employees at Hopkins, you can only use one grant. There are no income restrictions or requirements, but there's different types of loans that are accepted or not accepted, no cash sales that would make you ineligible. And then the other big thing is that the purchase of this home, that has to be your primary residence for a period of 5 years. So we're trying to offset those who want to buy properties, flip them, sell them, rent them, etc. So this would be your primary residence for 5 years. If you were to sell or move before that time, you might be responsible for paying back a portion of the grant to Hopkins. So then we're going to go boundaries and grant amounts. And let me pull up our map. Debbie, can you just give me a thumbs up? Can you see the map that I'm sharing now? Okay, I see others nodding. Perfect. No worries. So this map is actually pretty cool. It's going to tell you, if you click anywhere in it, it'll tell you what the amount of grant is available for that area. So you can see, let me see if it'll click over. Nope. Okay, well, it's still going to do all of it. Or you can click, let's say, Remington, and it'll give you a close-up there, as well as the information about what grant amount is available. And the other cool feature that I like to show everyone, because when you're home searching and all of that, you can enter in the address here of where you might be looking to purchase, and it will show you on the map where within the boundaries it falls. So it's a pretty cool option for if you're looking at multiple houses, you can kind of weigh and see where you might qualify. Okay, and then the tax portion. We put it on the website because it is a bit of a shock when you see that final amount of cash to close, when you're expecting a $17,000 grant and then it ends up being $11,403. So we like to say up front, here's what the calculation is. We do a tax calculation on every applicant. It's based on where you reside and what taxes you pay currently. We work with our tax office to do this. And so that's how we get that net grant amount that you can see listed in the third column there. And then the city's portion will always be $2,500 if you are approved for it. And so then we have that total cash to close of what you can expect. So it's shocking. I mean, it's still a wonderful program, and it's helped so many people buy houses, but with the tax implication, it does alter the take-home amount. So I just want to point that out. And then down here, we just have our grant repayment process, which I'm not going to get into today because you're all in the initial steps of home buying, so we won't even need to go there. So to apply. So actually applying for the grant is one of the last steps on our end that you need to complete. So you must complete your home buying course and counseling, have made an offer on a home that's been accepted, and have entered into a sales contract. Then you can apply for the Hopkins grant. The application will not be submitted unless you have done all of those steps, because you do need to include the counseling certificate document as well as the signed sales contract. So we've kind of outlined here just the steps that you need to take as you're applying, and then what to expect as next steps. Once your application is submitted, we will review it, and then you will receive an approval email from us with a letter of intent about the grant amount you'll be receiving, as well as the Hopkins employer verification form that you'll need to apply for the city grant. And then you'll apply for the Baltimore City grant. And we both use Neighborly software, which makes it really easy and convenient for us as reviewers and you as participants to fill in all your information. But they're two separate portals. So I do like to point that out because the application has to be completed twice. And then, as we talked about, grant payment is through payroll. So then here you're going to find the Neighborly. The other thing I want to just quickly point out are our resources. We do have, well, there's a pre-recorded webinar on what is the program and how to apply that you can watch at any time. If there's ever, there was just a trolley tour with Live Baltimore at the end of February. So if there's ever any upcoming events like that, we will list them here as well. And then just homes that are available in different neighborhoods. So if you already know the neighborhood you're interested in, we do have a listing of homes that are available. And then Live Baltimore is the other really great resource to check out if you haven't already. And there's links to that as well on our website. They offer other home buying incentives through Baltimore City and offer a lot of really great informational courses and webinars and group chats and just a wealth of information on their website. And the last thing I'm going to show you, because I know that I don't want to go over my time, over here on the quick links, I do have the counseling agencies, which I've linked to the Live Baltimore page because they keep it very current. So here are all of the counseling agencies that you can use. You can pick whatever suits your needs. It does not have to be, you don't have to be purchasing in Southeast Baltimore to use the Southeast Community Development Corporation. They all apply for Baltimore City. And then the other thing, we have the boundary map, the neighborly software portal. The Baltimore City Office of Home Ownership is where you will find resources for home buyers, and this will include the Live Near Your Work program and their information as well. You can see right here, and the contact information as well if you ever had questions about the city portion of that program. And then I also have the Live Baltimore site listed again, and we have FAQs as well. The last thing that I'm going to say is that Bayview is currently out of funds. They will replenish on July 1st, 2022. The city currently still has funds available, but sometimes city funds will run out. If that ever happens, we will post it on our website and also let you know as you're applying. But I just like to point that out just in case we do have any Bayview employees that are listening today. So I'm going to stop sharing my screen. Here we go. All right, thank you.
Can everybody hear me? This is Demetria Scott. Hi, I'm Demetria Scott from Long & Foster. I'm here to talk with you about the home purchase process from the agent perspective, and then answer any questions that you might have about the actual shopping process for a house. So the real estate agent is the one person in the transaction that knows a little bit about everyone's role in the purchase team. So even though I'm working with you to search for the house, also I will refer you back to your lender, your title company, the grant program office at Johns Hopkins, if there's additional information or additional steps that you need to take or things that you might need to apprise them of. Always be honest with your agent about your concerns and your questions. They're likely to have helpful suggestions based upon their recent experiences in the market. So today I'm going to talk a little bit about your home buyer consultation and the process, as well as things that everyone should know about the current market that we're in now. Okay. Thank you so much for the next slide. So a real estate agent who's a licensee in the state of Maryland can help show you any homes that are in the state of Maryland, regardless of whether or not they're on the market for sale by owner, if it's a home you pass by and you're interested in purchasing. Okay. And they can also assist you with new construction homes. So during the buyer consultation, that's going to be your first scheduled face-to-face appointment with your agent. And there's a common misconception in the business that when you call someone who has a sign in front of a house, that person can answer any of your questions and that person is working for you. But the actual person who's on the sign that's in front of the house or that you may see next to an ad when you're online, that person is more than likely representing the seller. And until you have a relationship established where you've signed a representation agreement, any agent that you talk to is working for the seller until you actually hire them. Okay. A good agent is going to ask you to do things. They're going to ask you to go ahead and get pre-qualified with the credit union. And they're also going to encourage you to go ahead and get started with your home buyer counseling. Okay. And then once you're actually qualified, an agent can help you marry up your pre-qualification amount with your monthly payment to make sure that you're comfortable and that the houses that you're looking at fit the budget that you want to establish for yourself. Okay. So the realities of the current market that we're in is one of the things that I was actually asked to speak on today. So in today's market, it really is a very strong seller's market. And in order to write a strong offer in today's market, I just want to talk about some of the things that people should keep in mind. So if you're not using a grant program or you're searching outside of one of the areas, you really want to try to assess or try and assemble the money to pay your own closing costs. A number of sellers are just not accepting offers that have closing assistance these days, or requests for closing assistance. There was a question in the chat box a little earlier about, doesn't the seller pay the closing costs? If it's more of a measured market between the buyer and the seller, then there's an opportunity to get closing costs. But these days, many buyers are submitting in multiple offer situations where they are faced with 10 or 11 offers that they might be competing against. And unfortunately, an offer with closing assistance would not be the strongest offer in that scenario. More than likely, you're going to need to pay your own closing costs if you don't have access to grant funds or you're searching outside of the grant areas. Okay. If you are searching and you're thinking about what other things you can do to make your offer stronger, a very clean offer with a short home inspection timeline, closing within 30 to 45 days, a swift home inspection, a simple contract. You want to limit your repair requests to the seller to serious items. Okay. And if you need to request closing from a seller, then it's strongly recommended that your request include 3% or less. If you are a move-up buyer, let's say that you're currently living in a home and you've outgrown that home or you need to downsize and move to another type of home. The current market, it would be best if your current home has already been sold or if you're in a position to purchase without selling first. A number of buyers in the market, they're making aggressive offers, and a lot of them are willing to let the sellers stay in the home for a short period until they find their own home. And some of them are offering the ability to do that and not pay any sort of rent back or rent at all for the period after closing that the seller has remained. Others are getting very nice terms where they only have to pay a small sum of money to stay there while they locate the home of their choice. Okay. If you're a move-up buyer, again, some of the stronger things that you can actually throw in are a 10 to 20% down payment, the ability to pay your own closing costs, and conventional loans are viewed across the industry as being a very strong option for a lot of sellers. Okay. As far as timing, and that's the last thing that I want to discuss today, with respect to the timing, when you first see the home and start looking for your search, how do you sort of measure it all up? How do you measure out the timelines? How do you make sure that everything is going to fall into place with maybe your move plans or your current lease expiration, et cetera? So if you are planning on using any of the grant programs to purchase, I strongly recommend that you start 5 to 6 months out from the actual date that you're hoping to move, because it's going to take a while to complete the 8-hour counseling session, whether you do it in person or online. It's going to take a little bit of time to complete that. And then the next stage would be for you to have a one-on-one counseling session. So once you're done with both of those, then you can actually start to look for a home. So the timing is kind of critical. And then from that point forward, you probably have a couple of months to actually locate the home that you're looking for. Once you go under contract, the typical contract can take 30 to 60 days. And then before you know it, the 6 months is up and you're moving in and you're at the settlement table. And I think that's everything that I had to say. The last thing, if we could move forward one more slide. The last thing I do want to talk about is Long & Foster's relationship with Johns Hopkins Federal Credit Union. We have a very advantageous program called Smart Move. It connects you to a number of partners in the area that can help you move, that can help make the process an extremely easy transition from you from one home to the next. But one of the biggest advantages of the program is that it involves a cash rebate to credit union members. So the cash rebate is up to 20% of the commission which Long & Foster receives for assisting you with purchasing the home. So if you're purchasing a home that's $300,000 and the seller is offering a $9,000 commission, then $1,800 of that commission would come back to you post-settlement in the form of a rebate check. Okay. So if anyone has any questions, feel free to reach out in the chat box. It's been a pleasure to speak with you, and I'm going to pass it back to Deborah.
All right, thank you so much to our expert panelists. If you guys do have any questions that you think the rest of the group might need to hear, if you could go ahead and put that in the Q&A. I know that our panelists have been feverishly answering the chat box and then also presenting as well, so multitaskers. But we do have this slide here. Like I said before, if you have something, a question that's very involved, very personal to you, definitely reach out to any and all of our experts here. And then, like I said, we will have the slides available to you in the next day or so, and then also the recording. So if Betty, I did have a question earlier today about student loan debt and how that affects your chances of getting a mortgage, if you wanted to kind of address
Sure.
that.
Okay, so right now is sort of an interesting time for folks with student loans because for most people, those student loans are in the COVID deferment, which means that no payment is showing up for the student loans on your credit report. In the absence of a payment, we're going to use 1% of the balance, which is frankly terrible, because a lot of people are on income-based repayment plans and their normal payment would be much lower. So what I'd suggest to anybody who has student loans in that type of situation is that you reach out to your servicer and get a letter stating what your actual payments are anticipated to be when this COVID deferment ends. I believe it's in May, okay? Because then we can use that much lower payment. 1% is normally a fair amount above what you'd normally be paying. If that works, wonderful, but for a lot of people, I'd really recommend that you take that extra step before you even start getting pre-qualified and just reach out to your servicer, see if you can get a letter stating what your future payment will be.
Okay, so we do have a few questions. We do have a little bit of time. This is an interesting one. If I get an approval for $300,000, can I buy two houses for $150,000?
The short answer to that is no. Okay, that approval is for one home. Okay. If you're going to buy two houses, only one of them can be your primary residence. The other one is going to be a second home or an investment property. All the rules change for that type of property and that type of program.
And we have, if we owe on taxes, will that play a factor on getting approved for a loan? Very good question.
Sure. So if you have an outstanding tax balance, okay, if it is a lien or a judgment, it would need to be paid before you could settle on your new loan. However, if you've made payment arrangements with the IRS, you had a big tax bill, you couldn't pay it all at once, you've got payment arrangements set up, just let us know. We have to show that you've made at least one payment. We have to show that you're currently not past due on that payment arrangement. But then we would just treat that monthly payment like a car loan payment or any other type of payment, and it's allowable.
Thank you. And then can we use money from international accounts for the down payment?
All right. Well, we get this a lot because of the fact that our membership really is international. Typically, what I'd suggest is that if you're going to use funds from an international account for the down payment, and that country is one where you cannot get statements in English, that you move the money over here as soon as you can so that you've got those 2 months bank statements without a large deposit. Sort of plan for that in advance. Because if we are looking for documentation of a large deposit, we're going to look for 2 months bank statements from that other account. And if the bank statements are in a different language, we're going to be looking for a certified transcript of those statements into English, and that will cost you additional money to get. So try to just plan ahead and get the money here if you can. Okay, sometimes those international bank accounts will let you print statements online in whatever language, and if so, that's perfectly fine.
All right. We have 3 more. Are current interest rates backing in the announced interest rate increases by the Fed, or will mortgage rates increase as the Fed increases the rates?
That's a complicated question because there's not normally a one-to-one correspondence between the Fed's rates, which are the rates that banks use to borrow from the Fed, and mortgage rates. Mortgage rates tend to track more with the 10-year treasuries. So that's just one factor that affects mortgage rates. And in some ways, when the Fed increases rates, it may allay concerns about inflation, which may make everybody happier and make mortgage rates go down a little. But the overall consensus of most economists is they do expect to see interest rates increasing over the next year and perhaps into next year. But if any of us really knew what was happening with rates and we could predict that 100%, we would be on our own private islands.
For sure. All right, 2 more. When we get pre-qualified, how much of the savings for a down payment would you like to see if you're not yet at the 10% mark for down payment?
Well, when we pre-qualify you, we're going to look at what you currently have in terms of savings, and we can give you an idea, based on your income and your monthly loan payments, et cetera, what you could afford, and give you an idea of how much more you would have to save in order to be pre-qualified for that amount. We're not going to write a pre-qualification letter for you until we know where the funds are coming from for the down payment and closing costs. So for example, if you want to buy a house for $300,000 and there's only enough money right now to buy a house for $250,000, we'd have to hold off on writing the letter for that higher amount until we can see the funds or know that they're coming from a grant or a gift from a relative or some other allowable source.
All right, and then this last question, somebody is moving to Alaska, which is awesome. Can I get a mortgage loan from another state, like in Baltimore, Maryland?
Yeah, we lend in Maryland and the surrounding states. So for Alaska, unfortunately, no, we can't lend to you. Being a credit union person myself, I would see if there's an Alaska credit union league you could reach out to and see if there's a credit union in Alaska that you might be eligible to join.
All right. Well, thank you so much. Anybody else have any other statements to the group? Everybody good? I think we're good with the Q&A, and I wanted to thank you all for attending today. Hopefully it's been very informative. I actually went through the whole home buying process myself, which was very interesting. And Betty and team were so helpful to me, and they will be to you as well. So have a wonderful, wonderful day, and catch us with the next seminar. Thank you so much.